Of woe tonight, but despite the negative perceptions around South Africa's economic outlook, the Old Mutual Investment Group is slightly more upbeat. OMIGSA is basing its positive outlook on the agricultural sector, which it says is a viable asset for investment.
Increasing electricity shortage, the weak rand and the continuing demand for commodities are some of the issues hampering South Africa's growth prospects. Consumer credit demand is still slow and car sales are falling further, but consumers are under less pressure than in previous cycles. The Reserve Bank has forecast GDP growth of 2.1% this year, down from 2.5% in December last year. But improving trade deficit and a low inflation environment are improving South Africa's growth prospects. The country recorded the second consecutive trade surplus due to the recovery in gold and platinum exports, as well as falling oil imports.
Well, we know there's lots of bad news in the South African economy with slow growth, exacerbated by the electricity cutbacks. But it's not all bad news. We've had some trade surpluses recently. It looks like the second quarter current account deficit to GDP ratio could be quite a bit smaller than what we've seen recently. And all that could be a bit supportive to the currency. And that can't be bad news for the SA economy.
At the same time, South Africa's farmland has yielded 22.1% over 15 years compared to the JSE index of 18.2%. Agriculture is reportedly a great investment opportunity for investors looking for a good capital preservation tool in Africa.
We see increased openness for investment across the continent. There's a couple of countries which have opened investment into agricultural in a big way. Countries like Nigeria and Zambia, recently also Angola, are seeing the need for investment into agriculture. There's neglected sectors in the past, and well, Zambia started as one of the first ones, and now you see actually that whole trend across actually the continent.
Although the economy is expected to grow at a slow pace this year, the outlook on inflation and interest rates are expected to be mild, and the economy is not expected to plow into recession anytime soon. Naledi Mulifi, SABC News, Johannesburg.